Good, good afternoon. We are live from the one and only Nasdaq market site overlooking New York's Times Square. I'm Michael Spector, and I'm happy to be your host for Nasdaq's second annual REIT Week Executive Panel. While the conference doesn't start until tomorrow, today we're lucky enough to have three very special guests and key members of the real estate community who are going to give us their take on the current state of the market. Joining us is Jim Nelson, Chief Executive Officer of Global Net Lease, Ben Butcher, Chief Executive Officer of STAG Industrial, and Bill Blackham, Chief Executive Officer of Condor Hospitality Trust. Gentlemen, welcome.
Thank you.
Ready to talk REITs?
Michael. Sure.
All right, we're going to start at the top of the panel with Jim. What are the benefits of operating a diversified portfolio? And within the property types you focus on, where are you seeing the most demand?
Well, first of all, thank you very much for having us here today, Michael.
Being here.
It's a real pleasure. We find diversification very important. You know, we are diversified both in asset class and in location. We have properties in Europe and the U.S., so we find diversification a very good advantage that we have for our shareholders. Currently, we're buying primarily in industrial distribution type of properties in the U.S., and we're finding tremendous value here. We have a very strong pipeline, and we've announced a number of acquisitions that we're in the process of closing.
Okay, great.
Stay out of our business.
My next question is for you, Ben. So can you give our viewers some insight into what's fueling the increased demand for warehouse space?
Well, warehouse demand generally correlates really well with GDP growth, so we've had a very long cycle of GDP growth. So that's first and foremost the driver. But over and above that, the advent of e-commerce and the continued growth of e-commerce has provided a real extra horsepower to the demand drivers of industrial. So it's a very good environment.
Great.
And by the way, thank you. He shouldn't be the only one.
Thank you for being here. The pleasure's ours. Bill, what effect, if any, has the recent tax reform had on the U.S. hotel industry?
I'd also like to thank you for the invitation.
Thank you. It's such a polite panel.
The tax reform and the tax law changes have had some near-term, already perceptible positive changes in our business. Specifically on the corporate side, with increased cash flow as a result of lower taxes and increased business confidence, business travel is expanding. And with that comes increased demand at hotels, increased occupancy, and the opportunity to, of course, push higher rates. Coupled with that is a significant increase in capital expenditures that have taken place post tax law changes. And those are projects, for the most part, which are multi-year in nature. And so with that, we're starting to see the effect of travel that's related to that, whether that's construction-related, consulting-related travel and trips, but that is also spurring increased demand. So corporate travel is generally up. On the leisure side, the consumer still has a significant amount of buying power, some of it fueled by the tax law change, and some of it is fueled, candidly, by the ability to still take on debt. So leisure travel is up. The net result of it is the indices are at a watermark level today. Occupancies are as high as they've ever been in the industry.
Sure. Okay. Ben, I can't tell you how many times I've heard the three most important things in real estate: location, location, location. So my question for you is, how important is location for a warehouse?
Well, location is obviously a big element of any real estate decision. Warehouse is the same as every other real estate in that sense, but if you will, the pinpoint or the pencil point where you draw where you have to be is a lot broader in industrial real estate. It can be within a few miles, for instance, where a law firm may want to be on a particular corner. Industrial buildings have a little more leniency in where they go. The drivers for where they go are very different than other types of real estate. Truck routes, actually, recently it's been availability of labor is becoming a big issue for warehouses. So still very important, different drivers than other types of real estate.
Okay, great. Bill, do you think there's a place for hotels and P2P home sharing platforms like Airbnb to coexist? Or do you think it's this constantly evolving thing where the two channels are constantly going to fight for market share?
Anytime that you have a shift or the introduction of a new concept, there's always a combination of skepticism as well as fighting, to retain one's position or to gain position in terms of the new entrant. But today they are essentially coexisting, perhaps not peacefully, but they're coexisting. The home sharing product the largest of which is Airbnb, is something that's here to stay. There's a certain segment of the consumer that prefers that guest experience and that product. And particularly where there is an ability for the consumer to gain access to not only an interesting alternative to a hotel product, but in many cases at a reduced price.
Right.
What is coming, I think, along the line is more of a blurring of the distinction between the two. For example, many consumers prefer the brands because of the loyalty programs and the points. That does not currently exist, but they are starting to be launched within the home sharing networks. On the other hand, hotels are subject to all of the issues which are important from the standpoint of fire and life safety, from the standpoint of ADA and other aspects of zoning codes that don't apply to the home sharing network. And so there's going to probably be a leveling of that playing field. And when you take a look at things like occupancy taxes that are paid by hotel guests, which are not paid in the home sharing network.
And we're starting to see that.
And you're starting to see that now. So the projection is the two will move closer to each other into the middle somewhere, and there will be a common ground, but they will coexist.
All right, fair enough. Thank you. Jim, do you feel that the headwinds associated with rising interest rates are over-exaggerated as it relates to the performance of net lease REITs?
I think they've been over-exaggerated.
Okay.
I think if you look back the last 6 months, it's affected the publicly traded REITs pretty dramatically. I think people are starting to realize it's not that big of a deal. Prices, share prices are coming back up. Our stock has been performing beautifully, the last couple of months. And I think you'll see that will continue. I think there'll be a leveling off. I think the smart investors obviously bought the stocks when they were cheap,
right,
and are taking advantage of it. And I think if you look historically, I think NAREIT did a study where they showed that 75% of the time in rising interest rates environment that REITs have outperformed. So I think we'll probably see a lot more of that coming forward.
So where should the focus be? Should it be on secular trends? Should it be on just an improving economy? I mean, that's a good thing for real estate fundamentals.
I think it's a great thing for fundamentals. The economy's been very, very strong. It continues to be strong. Unemployment rates are very low. I think the lowest they've been in a long time, 3.8%. And I think, the U.S. is outperforming Europe, which is one of the reasons why we're focusing on buying in the U.S. But I think all in all, the economy has been very strong. It's continuing to be very strong. And I think the REIT performance will prove that theory out.
Great, thank you. Ben, and this is actually a question for all of you, but I'm going to start with you. What should investors be paying attention to in your investment story? What makes STAG a compelling investment?
As an industrial operating company, which is somewhat different than a net lease company, we're operating real estate. We have shorter lease terms, et cetera, able to perhaps get the value more quickly.
Sure.
We have the broadest opportunity set of all the industrial REITs. We're looking at approximately 65 markets. Most of our competitors are looking at somewhere between 6 and 10. We just have a bigger opportunity set. Our pipeline is the largest it's ever been, with lots of very accretive transactions for us to look at. So it's a big opportunity set in perhaps the strongest sector overall real estate.
Okay. Bill, same question. What should investors be paying attention to in your investment story?
Condor is a unique investment vehicle by virtue of our investment strategy. We have the youngest age portfolio of anybody in the public space. The average age of our hotels is less than 4 years old.
Really?
We have bought hotels predominantly in the secondary markets. MSAs ranked 20 through 100 is our sweet spot. Those markets are outperforming the top 20 markets in terms of RevPAR growth. And because our portfolio is young and connected to the younger millennial travelers' guest preferences, by investing in brands like Home2 Suites and Aloft and others, we have delivered the highest RevPAR growth of any of the public REITs for many consecutive quarters now. And so that outperformance is delivering higher margins and therefore presents an opportunity to near term potentially realize share growth, which is perhaps better than our peer group. given that we trade at a larger discount to NAV.
Sure. Okay, thank you. Jim, what should investors be paying attention to in your investment story?
Well, there's a number of factors. It's really a great question. I mean, we buy triple net lease, long-term leases. 78% of our tenants are investment grade quality, which I think is one of the largest in our sector. We've got great tenants, long-term leases, great buildings, very solid dividend history, paying our dividend on time every quarter. Every month, actually, we pay our common dividend every month. And we intend to continue doing that. I mean, our pipeline is providing us with a lot of opportunities to buy properties at great cap rates and to grow the business. And that's what we do every day.
Okay. Ben, it's a similar question. I've seen the schedules for the next couple of days, and you guys are going to be meeting with a lot of investors. If you could have one message resonate with the investment community at REIT over the next couple of days, what would it be?
Well, and to boil it down to a very simple term, we're cheap. We trade an FFO multiple of around 14. The industrial average is 21. We're a $40 stock at a 21 multiple. We are an operator just like our peers are. We will have, through a cycle, similar rent growth to them. We think that the discount is not warranted, and our message is take advantage of, we're on sale.
Sure. Okay, thank you. Bill, if you could have one message resonate with investors over the next couple of days.
It's similar. We're a compelling investment opportunity given that relative to our peer group, we trade at a significant discount to our net asset value where they trade at about par. We have a dividend which is extremely well covered with a yield in excess of 7%. And we have the highest performing portfolio in the sector. So it's a tremendous discounted stock. So it's a great value opportunity.
Okay, thank you. Jim, one message. What would it be?
Take a look at Global Net Lease. A lot of people don't know about us. Current stock price, our dividend is in the high 10s. Great properties, like I said, investment grade quality tenants, either investment grade or implied investment grade, and we perform. So just take a good look at the company.
All right, thank you. What's your favorite thing to do in New York?
Eat.
Leave.
I think I might be, I'm from here, I'm a native, but I think I'm starting to get on that wave as well.
It's a great city. I apologize to New York. It's still good to leave.
Times Square is the center of the world.
Yeah.
I love coming here, especially with my wife, because she was born in Brazil, and the opportunity to have such a collection of people from so many different cultures and so many different languages being spoken. To us, it's fascinating.
It's a beautiful thing, right?
It's a great place to do business.
I think that's a great place to leave it. I want to thank you guys very much for being so generous with your time and giving us so much color. If you want to learn more about our panelists or their companies, we're going to drop some cash tags in the video's bio. Global Net Lease, ticker GNL, STAG Industrial, ticker STAG, and Condor Hospitality Trust, ticker CDOR. Thanks for watching. We'll catch you next time.
Thanks, Michael.